Here at Cboe, we operate listing venues, to your point, in the United States, Canada, UK, Netherlands, and Australia. And with that, each region has its own different regulatory regime and their own different process to listing ETFs. What's been really impactful is learning about those different processes in each region and trying to bring synergies or items that have worked well in different markets to other markets to really benefit our end clients. I know a hot topic in our industry right now is 24/5 trading. With Cboe's global presence, we operate on a follow the sun model. What many people don't realize is today, Cboe's VIX options and SPX options nearly trade 24/5. So from a technology perspective and from an infrastructure perspective, we're already leveraging our global expertise, and I can't wait to see how that evolves into the ETF space.
What are the main drivers behind the growth of Cboe ETF listings?
Looking at the ETF industry as a whole this year, we've seen 85% of the ETFs that have come to market this year be actively managed strategies. Furthermore, 40% of all new ETF listings that have come to market have been derivative-based strategies. So when I say derivatives, I mean strategies that are incorporating options, futures, swaps, whatever it may be. So Cboe's really been at the cutting edge of that innovation. We've done a number of industry firsts here. We were the first exchange to file for a spot Bitcoin ETF many years ago. We were the first exchange to list semi-transparent ETFs, and we were one of the first exchanges to file for the streamlining of multi-share class ETF listings. So the innovative approach that we've taken with our clients has really resonated well within the ETF community, and that's evident in our market share today.
How has Cboe adapted its listing process for ETFs based on derivatives or cryptocurrencies?
Here at Cboe, we have market structure experts on the derivative side. On the equity side, we have very talented people across the organization on the legal side. We're really staying at the cutting edge of industry innovations. With that, when we speak to our clients, it's not just the ETF listing team. With the derivative side, we have flex option experts that are walking through how people are utilizing flex options today, what those look like. We have a really strong data vantage team that's providing intraday net asset value calculations for derivative-based ETFs. An index services team, our team also provides theoretical option pricing on the data vantage side. And then with that, on the equity side, we work in lockstep with our colleagues over there on market structure benefits to our main equities book, BZX. In addition to that, we have a really strong option support center team over here that really helps out on the ETF side with getting options listed on various ETFs. So when we're speaking with clients, it really is a Cboe One approach and an effort across the organization as a whole, which has really worked out well for some of the clients that we cover on the derivative side today.
How does Cboe attract issuers focused on outcome-based and premium writing ETF strategies?
Cboe, being one of the world's largest and leading options exchanges, really has a great depth of bench on all things derivatives. With that, as I mentioned earlier, we have flex option expertise in-house. As you know, Cboe was the original exchange to roll out flex options back in 1993. So with that, our team is constantly speaking to ETF issuers, especially on the defined outcome side, as to what do flex options look like, how can you utilize them, this is how the industry is looking at them. And with the defined outcome ETFs coming to market, there's over 400 different ETFs that are defined outcome based today with over 70 billion in assets under management. Almost 90% of those assets are actually primarily listed on Cboe today. So we really have a great deal of expertise with working with our issuers and helping them come to market with solutions to meet their ever-evolving client base.
With over 115 unique issuers, how does Cboe build strong partnerships with these asset managers?
The Cboe One approach has been key, but a few other areas that have really resonated with our client base is really being a global exchange operator. So we're one of the only exchanges out there today to not only have a listing venue in the United States, but also ETF listing venues in Canada, the UK, Netherlands, and Australia. We've been able to work with asset managers to help bring them across the globe. And instead of them having to manage 4 or 5 different exchange partnerships, it's really one unique team here on the Cboe side that can help take them to those different regions. With that, there's customer service approaches here outside of the different business lines. Our trade desk constantly works with our asset managers to kind of work them through the different types of trades we're seeing on our market and things that come up throughout the trading day. And then holistically, we work with our issuers on co-marketing, so helping promote their products at the exchange. Behind me, you're seeing the SPX options pit. What's really unique about the SPX options pit here at Cboe is there's over 150 traders in the pit today. 20% of SPX volume still actually happens on the floor here, which equates to over $1 trillion on a notional basis each day. we actually utilize this trading floor to host bell ringing ceremonies on behalf of our ETF issuers and the milestones across their firms. So it's been a really exciting way of celebrating with our clients and utilizing Cboe's overall infrastructure and that Cboe One approach to individual business lines.
How open has institutional investor demand been for alternative and digital asset ETFs?
Here at Cboe, we were the first exchange to file for a spot Bitcoin ETF many years ago. With that, when spot Bitcoin ETFs actually came to market, we were the exchange to list the majority of them. But not only Bitcoin, we listed the majority of the spot Ethereum ETFs as well. With that, we're continuing to work with the asset management community on what's next. So with that, we've helped file for spot ETFs around SUI, Tron, Ripple, Solana, Pengu. So we're starting to continue to hear more and more demand from the asset managers on getting additional strategies out there for their end clients.
What's the next innovation or evolution you hope to see in the space?
We're really excited to see how multi-share class plays out. We were the first exchange to really file to streamline the listing process for multi-share class ETFs. If multi-share class does happen this year or next, whenever it may be, it could really pave the way for a plethora of ETFs to come to market. It's going to be really exciting to see that in different strategies that end up opening up in the ETF wrapper.